Bitcoin, pyramid scheme, or the future of money? Hello everyone, welcome to CG Money 24/7. This is a question that's been echoing in boardrooms, coffee shops, and online forums around the world. The debate is fierce, and the stakes are high. Is Bitcoin just another get-rich-quick scheme, destined to collapse and leave chaos in its wake? Or is it a groundbreaking innovation that could redefine how we think about money, value, and trust in the digital age? Is Bitcoin the biggest scam since sliced bread, or is it the revolution that will change money forever? Every day headlines scream about its meteoric rise and sudden crashes. Social media is flooded with stories of overnight millionaires and devastating losses. The world is watching, and everyone has an opinion. It's a question everyone seems to be asking, from Wall Street bankers to your Uber driver. Whether you're a seasoned investor or just someone curious about the future, Bitcoin has become impossible to ignore. It's a topic that sparks heated debates at dinner tables and in board meetings alike. Some see it as a ticket to financial freedom, a way to break free from traditional banks and government control. Others worry it's a risky gamble, a digital mirage that could disappear overnight. The truth is, Bitcoin means different things to different people, and its impact is felt across generations and continents. Some people think Bitcoin is a surefire way to get rich quick. Stories of early adopters turning a few dollars into fortunes fuel dreams of striking it big. The excitement is contagious, and the fear of missing out drives more people to jump in. Others think it's a bubble about to burst, leaving millions in financial ruin. They point to wild price swings and past crashes as warning signs, urging caution before diving in. So what's the truth? To answer that, we need to take a hard look at what Bitcoin is, how it works, and why it's causing such a stir. We'll explore its origins, the technology behind it, and the reasons it inspires both hope and fear. Buckle up, because we're diving deep into the world of Bitcoin, a journey that promises surprises, challenges, and maybe even a glimpse into the future of money itself. Anatomy of a scam, the Bernie Madoff story. In the world of finance, few names are as infamous as Bernie Madoff. His story is a cautionary tale, a chilling reminder of how even the most sophisticated investors can be deceived by the promise of easy riches. Madoff's scheme would become the largest financial fraud in history, shaking Wall Street to its core and leaving thousands of victims in its wake. Before we dissect Bitcoin, let's first understand what a Ponzi scheme actually is, because Madoff's scam is the textbook example. A Ponzi scheme is a fraudulent investment operation where returns are paid to earlier investors using the capital of new investors, rather than from profit earned by the operation of a legitimate business. Imagine a slick Wall Street guy, let's call him Bernie. He's charming, well-dressed, and seems to have all the right connections. He's the kind of person people trust with their life savings, believing he has the secret formula for success. Bernie promises sky-high returns on investments, far better than what anyone else is offering. And for a while, he delivers. Investors see their account balances grow, word spreads, and more people rush to give Bernie their money, hoping to cash in on the magic. The catch? He's not actually investing the money anywhere real. There are no stocks, no bonds, no secret strategies, just smoke and mirrors. The paperwork looks legitimate, but it's all a carefully crafted illusion. Instead, Bernie is simply using funds from new investors to pay off older ones, creating an illusion of success. As long as new money keeps flowing in, the scheme appears to work flawlessly. Early investors are thrilled, and their glowing testimonials attract even more victims. But this house of cards is built on lies. When new money dries up, when people stop investing or try to withdraw their funds, the whole operation collapses. Panic sets in, and the truth comes out, leaving everyone except Bernie in shambles. That's a Ponzi scheme in a nutshell, a seductive lie built on deceit, destined to crumble under its own weight. It's a system that preys on trust, hope, and the desire for easy money. Remember, early investors often profit handsomely in a Ponzi scheme, making it even more tempting and deceptive. Their success stories lure in new victims, fueling the cycle of fraud. But don't be fooled. No matter how convincing it seems, the system is unsustainable and always ends in disaster. The Bernie Madoff story is a stark warning. If something sounds too good to be true, it probably is. Bitcoin, Under the Hood, a beginner's guide. Now let's switch gears and talk Bitcoin. Imagine a digital ledger that keeps track of every Bitcoin transaction ever made. This ledger, called the blockchain, is spread across thousands of computers worldwide. When you send Bitcoin, the transaction is verified and added to the blockchain, ensuring transparency and security. No banks, no governments, just pure, decentralized digital money. Think of it like sending an email, but instead of words, you're sending value. It's fast, it's secure, and it's changing how we think about money. But is it a Ponzi scheme? Let's compare. Here's where things get interesting. In a Ponzi scheme, there's a central figure, like our friend Bernie, controlling everything. Bitcoin, on the other hand, is decentralized. There's no CEO, no central bank, and no government calling the shots. It's run by a network of computers around the world, all following the same set of rules. Furthermore, Bitcoin transactions are public and traceable on the blockchain. This transparency makes it very different from a Ponzi scheme, where transactions are often shrouded in secrecy. Of course, not everyone's sold on Bitcoin. The world of cryptocurrency is sharply divided, with passionate voices on both sides of the debate. For every person who sees Bitcoin as a groundbreaking innovation, there's another who remains deeply skeptical, questioning its legitimacy and long-term prospects. Critics often compare it to a speculative bubble, like the Dutch tulip mania of the 17th century. They argue that just as tulip prices soared and then crashed, Bitcoin's meteoric rise could be followed by a dramatic collapse, leaving late investors with heavy losses. To them, Bitcoin is just the latest in a long line of financial manias that have ended badly. They argue that Bitcoin has no intrinsic value and its price is driven purely by speculation. Unlike stocks, which represent ownership in a company, or commodities like gold, which have industrial uses, Bitcoin's value, they say, is based only on what the next buyer is willing to pay. They point to its volatility and the potential for market manipulation as major red flags. The wild price swings, frequent hacking incidents, and lack of regulation make some investors wary. For these critics, the risks far outweigh any potential rewards. Bitcoin supporters, however, argue that it's a revolutionary technology with the potential to disrupt traditional finance. They see it as a new form of money that empowers individuals, bypasses banks, and opens up financial access to people around the world. They point to its limited supply. Only 21 million Bitcoins will ever exist, its censorship resistance, and the fact that it operates independently of any government or central authority. Supporters believe these features make Bitcoin uniquely valuable in a world where inflation and currency devaluation are real concerns. They see Bitcoin as a potential hedge against inflation similar to gold, but with the added benefits of digital portability and ease of transfer. For many, it's a way to protect their wealth from the eroding effects of rising prices and unstable economies. Supporters believe Bitcoin is the future of money, envisioning a world where digital currencies are used for everyday transactions, remittances, and even international trade. They see growing acceptance by businesses and consumers as proof that this future is already taking shape. Ultimately, they argue, Bitcoin's current price is just a reflection of its growing adoption and the increasing belief that it could transform the global financial system. The debate between critics and supporters continues, but one thing is clear. Bitcoin has captured the world's attention, and its story is far from over. So, who's right? Well, it's complicated. Renowned economists like Nouriel Roubini have called Bitcoin the mother of all bubbles, while tech moguls like Elon Musk have praised its potential. The truth is, Bitcoin is still a relatively new technology, and its future remains uncertain. However, one thing is clear. Bitcoin is not a traditional Ponzi scheme. It doesn't rely on a central authority promising unrealistic returns. It's a decentralized, transparent system with a fixed supply, making it fundamentally different. So, is Bitcoin a Ponzi scheme? The evidence suggests otherwise. However, that doesn't mean it's a risk-free investment. Bitcoin is volatile, its future is uncertain, and it's not for the faint of heart. The key takeaway? Do your own research. Don't just take someone's word for it, whether it's a financial guru or a random guy on Twitter. Understand how Bitcoin works, weigh the risks and rewards, and make an informed decision. The world of money and technology is changing fast, and it's up to each of us to keep up. Thank you for watching CG Money 24/7. If you like this video, smash that like button, share and subscribe now for more videos.